let me go to Hemen. He's joining us today, this afternoon, for the last hour of the show. Hemen, just talk to us about how you're viewing markets at this point. Is it going to be a sideways market for the next 15 days? Is that how you're viewing it? And the broader markets outperforming, you expect that to continue, or a reversal possible? Will the large caps come back?
A very good afternoon to you, Harsh.
Good afternoon, Hemen.
It's always a pleasure. Frankly speaking, if you look at the Nifty, it moved fast. Post the Maharashtra elections, we moved 1,000 points in 3 days. After that, we moved another, we saw cool off, and we saw another 900 points in 4 days. So, frankly speaking, it's moved fast, a bit too fast. 24,492 is important. We went below it, came back, closed. I think that's important for positivity to sustain. 24,800 has been a source of resistance, will be, until it gets taken out. I have a feeling it's taking a small breather. 25,200 is on the horizon. Okay, coming back to a main question, will the entire December go doing nothing? I don't think so. Maybe a few trading sessions more, but I do not think that we will do nothing till December end. I believe 24,800 should get taken out by the end of the month. On the other hand, there is resilience with the Bank Nifty. Some uncovered gaps are still uncovered, which is a sign of strength. So, and many of the FMCG stocks deeply oversold. Okay, right now IT is the only thing which is running, but there are a whole bunch of mainline stocks which are waiting to turn, at least from a corrective point of view. So I think it's a matter of time before we take out 24,800. I believe the latter half should be slightly more exciting, in the sense we should be gravitating towards 25. Harsh.
All right. And specific views and levels with regard to the Bank Nifty, Hemen, if any?
Okay. Excuse me.
Yeah.
The equivalent to the 24,492 for the Bank Nifty, Harsh, is 52,600. I mean, these are closings. So if 52,600 holds, I know 52,600 is 1,000 points away, but trust me, index like Bank Nifty swing 1,000 points in half an hour. So 52,600 sanctity needs to be maintained as far as closing is concerned. I believe it would be. So I would be bullish as long as we have, not 22, 52,600. And above 53,800, we are testing 54,400. So the relative strength in the Bank Nifty is amazing. There's a big range, Harsh, between 49,975 and 54,500. And this has been on for a few months now. So extreme short term, yes. 52,500, 600 is important support. Even lower, even closer than that is 53,200. So I believe we are forming a base. At the risk of sounding overly optimistic, I believe first 53,800, 54,400. I think we can open the floodgates to slightly unreasonable levels as of now. So these levels are important. 52,600 make or break.
What about stock recommendations, Hemen, for the morning or for the afternoon rather?
Yes, Neeraj. Firstly, a buy call on IndusInd Bank is being battered into submission, going nowhere, deeply oversold, positive divergences, crossover buys, base formation happening. I believe this might get converted into a rounding bottom, but nevertheless, buy on IndusInd Bank at 1,000, stop loss 975, target of 1050. The other one is slightly different. It's a buy call on Nykaa, Neeraj. We spent almost 20 trading sessions over here between 164 and 176. And now we're on the verge of taking this out. Okay, it's probably gone up a bit by the time I send the recommendation, but nevertheless, so one can buy Nykaa with a stop loss of 163, target of 184, which I think we can adjust it a bit to stop loss at 165 and a target of 188. So a breakout comes in at 176 as far as Nykaa is concerned. 4-week consolidation, a lot of technical positives, crossover buys, positive divergences, looking good.
Okay, well, time to talk about the top 3 stocks on the radar of our research team, and Mahima Johnson to talk about those. Mahima, what's standing out for you?
Right, Neeraj, so on the top of my list is Fairchem Organics, where a company has raised its guidance in the investor presentation that came out on Saturday. Now, the stock is seeing significant gains on the back of this in terms of the projected total revenue, which stood at around 621 crores in FY24. They've said that this will go to 735 crore in FY25 and 979 crores in FY26. In terms of projected EBITDA, which was 67 crore in FY24, this will go to 120 crore in FY25 and 233 crore in FY26. And lastly, in terms of margins, this is a very interesting one because FY24 margins stood at 11%, but the management has said that they are aiming for 16.34% margin in FY25 and 23.8% in FY26, which is why the stock is seeing significant gains. Moving on, the next one on the list is Yasho Industries, where this particular stock is buzzing in trade because the management has said that they will consider fundraising. Of course, this fundraising will be considered on 23rd, where all the other metrics will be determined as to how much fund will be raised and for what it will be raised for, but this is the information we have right now, and the stock is up around 17% as we speak. Lastly, Premier Explosives is the one which is also buzzing in trade today. Company has entered into an MOU with a subsidiary of NIB Ordnance and Maritime. This will set up a JV manufacturing defense and aerospace products, and the proposed joint venture will probably the Premier Explosive will hold around 51% and 49% will rest will be not be held by Premier Explosive. So these are the three stocks on my radar that are buzzing in trade today.
Okay, so some of those big movers, but while we are at it, earlier in the day we also spoke to TV Chaudhary, who's the managing director at Premier Explosives, about their joint venture plans and how they plan on funding it. Listen into a slice of that.
Coming to the joint venture, what we have proposed to form with Global Munition Limited, we are going to be a 49% partner in it, and then 51% comes from the Nykaa group. And we want to fund it with our internal accruals, and also the proposed fundraising we have planned through QIP or other things. And it is expected to contribute at least 1,000 crores in 2 or 3 years span. It is expected to come 1,000 crores turnover company, the JV company. And we being for the 44 years in explosives business and an energetic materials business, and Nykaa being the fast growing company which is producing hardware and all those, we want to have a totally complementary to each other skills and performance, and then expect a big growth in future.
Okay, Hemen, let me come to you on these. Any of these on your list, and what should one do with some of these names? Big moves in trade today.
Okay, I heard the one about Premier Explosives, Harsh.
Yeah.
Okay, circuit on Friday, circuit today. Great looking pattern, formed a base, breakout above 520. Now, within circuits, one can't say much, but I believe we are heading at least 150 points higher from here as far as Premier Express is concerned. And as far as Fairchem, it looks more like a bounce, Harsh. I'm not sure how. Okay, we've been down for 5 months, so deeply oversold, above 1,000, we could get further traction. I'll look at a recovery, albeit a very strong one. But if I were to pick and choose, I think Premier looks better.
At all, if that's on your list?
Yeah.
Yasho Industries.
Okay, sorry. Yasho Industries. No, but I can have a look sideways. There's a big base formation happening. Limited data on NSE new listing. It's been over a year hatching eggs, doing nothing between 1,500 and 24. Setup is looking better, but we've been sideways for too long, Harsh. And if I take a slightly longer term view, frankly speaking, it's done nothing since March 22. So going nowhere. I'm not bearish, but if the stock doesn't move for 2.5 years, we'll have to wait for the breakout or a breakdown. I don't see a breakdown, so maybe a breakout to come in.
Okay, well, wonder if a breakout is coming Swiggy because it's forayed into the event ticketing business and it's gotten the stock excited for sure. Mahima is back with us again. Mahima, what happens next for a Swiggy, for a Zomato, for the space?
Right, Neeraj. So I think in the past 1 week, there has not been a day gone by where we've not discussed Swiggy and Zomato. And yet another update from Swiggy where it is, foraying into the ticketing business. And this will basically cover for now New Year parties, live music and DJ events for now. And this is right now present only in Delhi, NCR, Mumbai and Bengaluru. This will basically compete with Zomato's District app. Zomato has just a month ago launched the District app for its event ticketing business. Basically, both of these companies are trying to diversify their revenue streams beyond food delivery and quick commerce. In terms of the recent launches also for Swiggy, they launched Swiggy One Black, which is an exclusive invite-only membership for consumers. And this is basically for users who can pay a premium for concierge services. So basically, both of these combined together looks like Swiggy is trying to aim for something bigger, which might or might not be just for exclusive members. Moving on, Swiggy is also buzzing on the back of an Axis Capital note, which is initiated by with a target price of 640. What they're saying is that this presents a compelling investment opportunity, and they believe that quick commerce market gross order value will touch around 6.8 billion by FY25 year end. And the pickup in quick food delivery, that is Swiggy Bolt, is something that will be a further kicker for the stock. Now profitability will see improvement going forward, and quick fixes should also aid margin expansion in the near future. And lastly, they expect a 38% revenue CAGR between FY24 to FY27. So all of these reasons combined make Axis Capital positive on Swiggy, and these are the couple of reasons why the stock is buzzing in trade today.
Great time to also bring on board. Thank you so much, Mahima. First off, great time to also bring on board Siddhartha Khemka of MOFSL to talk to us about exactly this and more, of course. But Siddharth, just initial views with regard to this entire quick commerce and the fast evolving fundamentals in some of these companies, especially a Zomato and a Swiggy. How do you view all of the developments playing out and valuations, where Swiggy is, of course, trading at a far larger discount, but is, of course, not, doesn't have the kind of market share Zomato does?
Yeah, hi, good afternoon, Harsh. So I think this is a debate which has been going on since the listing of Swiggy. We are very positive on the entire quick commerce space. We believe this is once in a generation kind of opportunity to participate in a new sunrise sector which offers immense growth potential. And we have discussed it so many times that there is space for all the players to come in because there is huge opportunity, untapped opportunity, and requires a lot of investments. As we saw, there needs to be the entire supply chain plus your dark store warehouses, the inventory. So it's not a winner takes it all kind of a game. We believe there is room for all the players, and to become profitable, there needs to be a sustainable growth. Swiggy on its path has now raised the money from the IPO to expand in the quick commerce space. It has shown innovation and leadership in some of the segments. For example, it was the first to launch the 10-minute food delivery. While it may be an experimental thing, but still goes on to show the innovation that it can bring to the table. In terms of valuation, as you rightly said, Zomato clearly is the leader with the strong profitability, cash flow generation, and now with the talks of QIP fundraise, again plans to expand in the quick commerce space. The newer growth segment, as you again discussed, is the events. The dine-out business has already been there. Now the events business, we see the strong demand for some of these events where we have the singers from India, from abroad, and the kind of sale that happens in few minutes, it is all sold out. So I think that's a good diversification strategy because some of these events are profitable for them as a platform to sell. They already have the technology. They already have the user base. So it definitely makes sense to diversify. Coming to Swiggy, I think there is still some time for profitability. I think we are expecting it to become profitable by FY27. So while the news flows are definitely positive, I think the stock could remain volatile till the clear path to profitability is visible.
Okay. Hemen, your views on some of these, especially on the quick com as well as so maybe just a Swiggy and a Zomato. Which one do you prefer on charts?
Well, if I had to order food, Harsh, I prefer Zomato, but then that's on a lighter note. Swiggy has relatively less data. It's a new listing. So frankly speaking, Zomato would be more comfortable, but I have more data to analyze. But from whatever data we have in terms of Swiggy, Swiggy looks quite stable and is in a short-term uptrend, paucity of data. So if I disregard that, Swiggy looks better. Zomato should start looking good above 305. Harsh.
Okay. Let me also broaden this a little bit more. And let me come to Siddharth first on this one. If I were to include some of the other new age tech companies, something like a Paytm, something like a PB Fintech, the kind of run up that some of these stocks have had from the bottom, we've gone 3x from the bottom in some of them. I recall maybe a couple of years back seeing PB Fintech at 350. We're currently at 2100 plus on that counter. Siddharth, and you can add a few more, maybe a delivery of sorts. Would any of those interest you in terms of businesses, and how do you view valuations in some of these? Because something like a PB Fintech guiding for 1,000 crore PAT in FY27 and being valued at 60,000 crore plus in terms of market cap, how do you view that?
Yeah, Harsh, I think a lot of these tech companies, platform companies, you can include IndiaMart, you can include Naukri.com. I think some of them have definitely seen a lot of improvement in numbers, and that is what is driving the stock prices. If you also include Paytms of the like, they have managed to remove the overhang. The shareholding pattern have been simplified. They've got some of the approvals, including the approval to get new clients on board the UPI, which was a big overhang. And I think the overall consumer credits, which was likely to be a growth driver, will come back in some time. So I think clearly a market likes to see a clear roadmap in terms of profitability. Wherever you are seeing that visible, I think market is going in a rush to give valuation because the growth can be super normal, and that is what is driving the valuations. What we like, we definitely like Zomato among our preferred picks. We like PB Fintech, we like Info Edge. We also like we used to like Paytm, but at this valuation, we have a neutral rating on Paytm as well as on Swiggy. At this valuation, we have a neutral rating.
And if I were to widen that question and serve it across to you, Hemen, any of these would interest you?
I think Paytm was the next favorite, Harsh.
Right.
He's had a brilliant run up. So nice was good. And yeah, but it's a bit late in the day. So I also believe in I think delivery is something which Harsh hasn't done much. But as of now, I think there's a very clear base formation in place. And after quite some time, we are seeing some technical green shoots. So yeah, from all of the stocks that you mentioned, I think delivery stands out. Okay, yes, it's also moved 20% in the last probably couple of weeks. So on a small cool off, but I believe a turnaround is in place, and we are seeing a revival even on the medium to long term chart. So on a decline, I think of all of these, delivery stands out. And Nykaa, yes, I've already given a call at the beginning of the show, and Nykaa also looks promising from a medium term point of view.
Okay, excellent. So those are some calls for you with regard to new age tech, but let's shift focus to traditional. One of the stocks flying in trade, Oberoi Realty, initiating coverage note by Axis. Anushi joining us to tell us what the key tail and headwinds are, and what the bull and bear case could be, because a 6.5% move in trade today. Anushi.
Hey, so Oberoi Realty is in focus after Axis Capital has initiated a buy call on this one, and we are looking at an upside of more than 20%. So let's just dissect what could be watching out for the company, which is on both the good and the bad side. Firstly, in the bull case scenario, strong position in MMR residential market. It is one of the dominant players in this MMR region, if we speak. In the second half, the company has already, in the first half, we have seen the company achieving almost 50% of its guidance, and what is left is 58% to be remaining in of the 6,000 crore in the second half of H2 FY25. So strong focus over there. Now this would be favored by the key projects that is leading to this kind of stock performance. Also, a lot of investors are betting on the Pokhran road project that is there, which is along with some other projects that it plans to launch in the southern part of the city. So company plans to launch projects along with the MMR region and NCR region also, which would be in Q1 of FY26. So strong watch out in MMR region along with some other diversification in terms of area that the company is making. However, what also could be the bear case for this is what could be the bear case in this scenario is along with the strong pipeline that the company has, if there are any potential delays in ongoing of projects that could affect the company's business or operational metrics that we are seeing. So that could be it. Coming to our second point of the conversation, we've spoken about the launch pipeline, we've spoken about what could be expected in our different regions, but along with a strong launch pipeline, it also has a very strong annuity portfolio. Just to give a context on this one, it has a substantial leading portfolio with occupancy levels in these Commerce 1, Commerce 2 exceeding 90%. Overall occupancy, if you are to see, even Access pointed it out in today's meeting, is expected to surpass the 90% mark as well. And even the so that remains as the watch out point for the company along with its launch pipeline that we'll be seeing in the next 2-3 quarters. But on the other side, project delays impacting cash flows and revenue. So one of the key points in the revenue in the real estate companies is its revenue recognition pattern. So if there is any kind of delays in these in some of these projects, that could affect the revenue recognition patterns of the companies, and the numbers for these real estate companies may look skewed in that manner. And even the cash flows to be another is the cash flow indicator that could also be affected, which could be utilized for other land development parcels as well. So that was the second point on it. But let's also look at this third point. The company has a favorable net debt to equity of 0.02x. And so with the low leverage and along with the fundraising it has done of about 6,000 crore, it is in a favorable position. It is sitting in a favorable cash position to raise further funds also if it wants, and to utilize these funds for growth opportunities forward for the business. So strong emphasis on that. And next year onwards, what could be a potential trigger for majority of real estate companies that we could be watching out is also the potential rate cuts that could be beneficial for the company. However, a lot of investors, a lot of brokerages have given this indicator that current valuations of the company is something that we should be watching out for not just Oberoi Realty in focus, but even the other real estate plays, as current PE valuations or even other metrics, if we are looking at it, may leave a little room for upside, but that again depends on the kind of launch pipeline and the pre-sales growth that the companies would project forward. So if you look at the current PE, that is around 43 times versus a 3-year average of 32x. Obviously, we do have to keep in mind that the real estate cycles work in a different manner. So comparing it to a 3-year average may not be the right term, but it's something that we should be watching out for, as there has been a significant gain for majority of these real estate players in this 1-year period. The stock has seen about a 60% return in this 1-year period itself. So this is the overall view that we are seeing for Oberoi Realty as of now.
Okay, Oberoi Realty in particular. Siddharth, let me come to you. First off, thank you, Anushi, for that. Siddharth, let me come to you first with regard to Oberoi Realty. Would you be as positive? That's one. And about the broader real estate space, there's been a bit of a slowdown, it seems, even though, commentary seems bullish as ever. Your views on that?
Yeah, Harsh, I think if you look at overall real estate space, Q2, we saw about a 5% decline in the sales booking due to seasonality, as well as due to lack of new launches on account of approval delays. What we also saw that unlike FY24, FY25, we saw new launches by only a handful of players, and that has led to, I think, pricing being firm. And Q3, definitely there is an uptick in demand leading to both stronger demand plus the price rise in some of the key cities. Management commentaries across large players are pretty confident about achieving a 20 to 30% overall growth, the target they set for FY25. So what we believe is that real estate demand looks pretty strong with the festive season. Companies are set to achieve their pre-sales guidance. On a high base, they are able to maintain the 20 to 30% growth, which is pretty positive for them. What we like, Oberoi definitely is a steady player with its new launch in the Pokhran, which was much awaited project, which should see a good booking. Additionally, the company plans to launch new towers in the Borivali, Goregaon in the second half of the year, which should again lead to good growth in the overall momentum in the sales booking. Current valuations, I think a little bit is already baked in, so upside could be limited. What we like is Lodha. They have ended its pilot project in Bangalore, and now they have launched 2 successful projects planned to increase the market share in Bangalore by 15%. So diversifying from the Mumbai region to some of the other key real estate space. Growth-wise looks pretty strong. Valuations, again, real estate pretty difficult to judge, but in terms of growth, I would see that Lodha, which is our preferred pick, followed by Godrej Properties. We have a target price of almost 1550 on Lodha. Oberoi is closer to our target price. Godrej Properties, while one which is underperforming, but again, management seems pretty confident in terms of overall growth over the next couple of years. They believe that the real estate market is in the mid-stage cycle. So there is still few years of growth left in this cycle, and expectation of a rate cut early next year that would also support the mid-market segment. And hence, again, look at some of these mid-market players, especially Godrej Properties, which we like, which is a buy rating with a target price of 3,700.
2 key points, Neeraj, before we slip into a break. One, Godrej Properties. Promoters have been consistently buying. We had on Thursday Godrej Industries buy, and we flagged that off on Friday. We also have now on Friday Godrej Seeds and Genetics. My apologies. On December 11th, the promoter Godrej Seeds and Genetics bought a stake, or rather increased their stake in Godrej Properties. So you're also seeing buying action from the promoter, which is always a positive. But let's slip into a very short break. On the other side, we get you top buy today, sell tomorrow picks, along with, of course, more insights on stocks with both of our guests. Stay tuned.